Good morning, good morning. How's everybody doing today? Nice to see you all. Tuesday, bright and early. Well, a little bit later than usual, 10 a.m. But we're going to take a look at the markets. We're getting some really nice moves in the markets. If you guys haven't taken a look, you'll see that we're getting some nice retracements, just like we were pointing out in the latest EURUSD report. So this one's going to be a good one. So let's start by taking a look at gold. You see gold rattling up? That was quite nice, right? Gold had contacted the demand. You retrace, contacted demand, and now it's rallying up. Okay, we were pointing this out over the weekend with the analysis and the EURUSD report. But we gotta also be careful because we also know what could potentially be setting up here, right? So we got that nice retracement that's taking place to the upside, but this could be short-lived, so we gotta be watchful of that. Okay, so we're gonna go through the markets briefly. We're gonna take a look to see if there's any trading opportunities that are to be had, and just get an overall feel for what's taking place with gold and the euro and the dollar and so forth. Okay. Let's see some of your messages. Nazar, you're looking at USDCAD inside supply. Yeah, I was checking out the 1 hour chart. Looks like USDCAD is inside supply. Were you thinking about going short? Is that why you were asking? Hope you are well. By the way, thanks for the updates in the forums. Double check. Okay. So we'll take a look at that and see what's going on. But first, let's get an overall feel for what is taking place. Because, I mean, just because we have price sitting inside of a supply zone, it doesn't mean we want to be selling, right? So first, let's examine what is taking place here. When we look at gold, we saw that price dropped significantly last week. And the reason for this was the profit taking that we've been talking about for quite some time on long positions. And it retraced and now contacted some demand that we have located here on the daily chart. And it's also sitting within that higher time frame area of as well, the monthly chart. So the short to midterm move was up. That was the expected move. And that is what we are getting right now. So we could see price rally up into the 1850s. Would be a good spot to see price rally up to. So short to midterm move up on gold is what is expected. Okay. Now let's drop down to oil. What took place with oil? That's right. Massive demand has been removed, or supply, sorry. We've talked about this for some time, and now it has taken place. Now let me point out something, okay? Point out something to you. I have to really zoom in this to show it to you. Take a look at what's happening here, okay? Do you see how price just went a little bit over that red area, and now it's dipping back down, okay? That's a very strong sign for us, okay? A very strong sign indeed. Now, we were talking about this. I had mentioned it in previous reports that I would really like to see that take place. And if it does take place, then that tells us that over the very long term, we can expect oil to go even higher. All right, so that is what our expectations are. And we will take advantage of that if it continues to build in that direction. But now the institutions they did something very profound. They removed obstacle that they had put in their way, all right, and that's been in existence for quite some time. So now they've taken that out. Now without the obstacle, price is free and clear to move even higher up the charts. So we should be expecting that, but we should also be aware that just because this has taken place at the upside and momentum is to the upside, it doesn't mean the momentum is going to continue to the upside right now. Okay, so let's just wait and see what they do, because if they retrace it down to areas of demand, then I will be a buyer. All right. All right, let's switch it over to the dollar. So the dollar, we had price rally all the way up, and it contacted the area of supply that we were waiting for really nicely right there. Look at that. That's a weekly area of supply that we located on the chart. And as price was rallying up and then paused, we said, well, price just doesn't usually pause in the middle of nowhere, so we expect price to continue heading higher until it contacts that area of supply. And so now it has done that. And on the 4-hour chart, we have a situation where we had the break of a trend line, and we had a supply zone up here being created, and now price is heading up towards that. Okay, so what could happen, what could very likely happen, is price comes up to this area of supply and then reverses and heads lower. And if that does happen, then we would be looking at, let's see, the 92s. A drop to the 92s. So 92.50 down to the 92s, and then potentially even further down if they were to remove this obstacle here on the daily chart. Okay, so I think that's a decent expectation. I mean, it is somewhat risky, and I'll explain to you why. So let's go through our color coding system. Okay. Now, I mentioned that when we look at the dollar chart, the monthly chart, we can see a lot of supply being created. Okay. There's lots of areas of supply being created. Let's zoom out a little bit. Okay. There's lots of areas of supply being created. One here, one here. Okay. And in terms of demand, we have this area that's been tested a few times, and then we have this area down here. So overall, the bigger force that's in play here would be supply. So with that being said, let's do it a little bit larger. With that being said, if I look at the monthly chart, to me it's bearish. All right. Now when I look at the weekly chart, it's also bearish, but it's got just a tinge of neutral in it. And the reason being is because we don't have any downtrends, and you know, price has been ranging for some time. So when price is ranging, there's a bit of unpredictability with it. But the thing is that when we examine the chart, we see that there is supply on the chart, and supply is currently in play. So if I had to favor either bullish or bearish, I would say bearish is definitely the way to go. Now, when we look at the daily chart, this one's bullish. Okay, this chart is bullish. Why? Well, because price has been going up to the upside. They've been removing supply areas, and they've been creating demand zones. So when supply zones are being removed and demand zones are being created, that's a bullish chart. All right. And now when we come here to the 4-hour chart, it's neutral. Why is it neutral? Because it was trending to the upside, but now it's shifted momentum to the downside. So does that mean that it's going to drop? Does it mean it's going to consolidate, stick in a range? We don't know. Okay, but the momentum is shifting. So when you look at the color coding here, what you can see is there's some bearishness on the higher time frames. When we go to the midterm time frame, you know, the daily chart, we're looking at bullish. When we look at the lower time frame, we're looking at more neutral. So just based on what has been taking place, we can see that we are going from bullishness to more of a neutral, okay, neutral sentiment. So we'd have to make the assumption that if we were going to be taking short trades off this area of supply in the 4-hour chart, we'd have to be making the assumption, or having the assumption, that price is going to reverse from here to the downside to help facilitate this area of supply, on the weekly chart, which is somewhat bearish, which would help to facilitate a move lower on the monthly chart, which is also bearish. So there's a few things that we have to take into consideration if we're going to be taking a trade like this. So something a lot safer would be to bring this down, this 4-hour chart, to a 15-minute chart and observe the pattern. Observe the price pattern, okay? Because this is what we have right now. Here's the supply up here, and price is currently over here, all right? So it's likely going to continue to the upside until that area of supply is contacted, likely, okay? And if it does, if price comes up here like this, and contacts, the first thing I can tell you is that there really isn't the greatest formation being created right now to draw an ascending trend line, all right? It's just not looking good for that. So based on that, I would be focused on this area here, right here. And that area is an area that if price does come up here and contact supply, I'd be waiting for this area to be taken out, and then retracements up to areas of supply for a continuation of a move down. So this could play out very well for shorter term trades to the downside, okay? Now, since we have this idea of price reversing momentum to the downside with the dollar, let's look at the other charts. Let's look at the other assets here and see if there's anything that's correlating that. Okay, so for instance, let's look at USCAD. So by looking at the dollar chart, we know that we are expecting a little bit more upside, but then eventually it to turn over and drop. Okay, so now let's go through our color coding system to see if what we're seeing here on the charts is similar or maybe even stronger in terms of bearishness for the US dollar. Okay, so I look at the monthly chart, and what do I see? I see this chart is neutral. Okay, it's neutral. It can go up, it can go down, it can go anyway, right? And if I look at the weekly chart, I'd also say that it is neutral, but with more bearishness or bullishness than bearishness. Okay, neutral, but if I had to have a bias on this one, it's slightly bearish to the upside. Okay, same thing with the daily chart. If I look at the daily chart, it's bullish to me. It's bullish to me. And so if I look at the 4-hour chart, I would have to say that it is neutral. All right, so just look at this image. What do you see? Do I see any red here? I don't see any red here. So is that telling me that we should expect price to drop down? It's not telling me that. Okay, so if I was going to be wanting to take a short trade with the dollar, I would want to correlate that with other dollar pairs to see if we're seeing setups that would tell us bearishness is what is to be expected. And I'm not seeing that here. The fact that I'm seeing 2 time frames neutral, a third one neutral but with a little bit of bullishness, and the other one completely bullish, I don't feel confident in thinking that this is going to be going down anytime soon. Okay, so now let's go over to the US Swiss. So with the US Swiss, remember what we were mentioning about this weekly chart. Okay, this weekly chart is neutral, but it's got a little bit of bullishness on it. Why? Well, because of what we have mentioned before. Price was ranging, and during the ranging, it contacted demand, right? And now it's pushing to the upside. And what do we have above price? We have supply. So if price just left demand, its natural tendency would be to move until the opposing supply has been contacted. And by looking at this chart, it's moved up and it's stopped. So the next logical move would be a continuation of that move to the upside until supply is contacted. Now, it doesn't necessarily have to do that, but that is what we're seeing. We have to go by what we see. So I wouldn't just jump in on a short trade here because price is not contacting any supply. All right? It could drop, but it's not something that I'd be taking a short off of because there's nothing to indicate at this point that price is going to drop. And I only want to get involved in markets where, what I'm seeing on the charts is indicating that something is going to definitely happen. And that's not what I'm seeing here. If price had contacted this supply and then was shifting momentum to the downside, then I'd be more inclined to engage in this to the downside. All right. Last one is the US dollar Japanese yen. So this one is reacting to the downside. We were talking about the reason for this, right? Because we had the dollar needing to go just a little bit higher to contact that supply. And so we said it's very likely this is just going to go a little bit higher, deeper into that area of supply on the weekly chart and monthly chart before it reverses down and moves lower. So now we're seeing that, okay? We got that supply being contacted, and now we're seeing that drop. So the color coding system, let's do it again and see what we get. So if I look at the monthly chart, my bias would be bearish. Okay, why is that? Well, it's in a range, but supply is being contacted. All right. If I look at the weekly chart, I'd also have to go bearish, but with a little bit of neutral in there as well. Why? Well, because the area of supply has already been contacted twice. The first time it was contacted and moved down, it touched the top side of the descending trend line, moved back up and contacted the supply again. So now this supply is a little bit weaker than it was the first time it was contacted. All right. So there's a little bit more of a neutral feel to the chart, in my opinion. Now, if I look at the this chart here, the daily chart, I would definitely see it as being bullish. Why? Well, because it's in an uptrend, and yeah, supply has been contacted, but it's still in an uptrend. Okay, it's still holding. So that could be an obstacle for me, because if I wanted to get in short, I've got two time frames that are supporting me to a certain degree, right? Monthly and weekly are supporting a move to the downside because of the bearishness that I'm noticing. But one of the obstacles that would prevent me from getting in short is this daily chart, because we don't know how this is going to react under the short term. Remember, short term is multiple hours, multiple days. So under multiple hours, multiple days, price can come down, contact this demand, head up. All right. And if I was going to be taking a short-term trade to the downside, do I want to be taking a short-term trade to the downside now, right before a daily chart is about to re-engage with its uptrend? Wouldn't be a good idea. Okay? Wouldn't be a good idea. Not in my opinion. So I would want to make sure that this chart is dealt with first. Meaning, I would want this daily chart to turn more bearish than bullish before I start engaging in short positions. So for me, I'd be watching this chart and waiting for that to take place. Once that does take place, then I'd be more inclined to enter into short positions on this chart. Okay, so that's what we're seeing with the dollar pairs. So you can see it's a little bit of a mixed picture. You know, the US dollar showing some weakness, rallying up, but we have the momentum shifting on the 4-hour. Daily chart is somewhat bullish, but the other charts are supporting weakness. So that's a good sign. The USCAD, this is the problem here. The USCAD is the problem because this one can rally a lot more from where it is right now. I mean, if I had to take a trade right now on the USCAD, it would definitely be going in long. That would be the way that I would trade this. Okay. And what I would do is I would wait for this area to be taken out. And then once it's taken out, this area of supply in the 4-hour chart, I would go long. That's what I would do. Okay? That would be my move. And remember, the Canadian dollar is getting weak right now. Okay? And let's quickly switch over to oil. What is it doing? It's getting weak right now. Okay? It's getting weak, and it can continue to get weak because of what we were talking about earlier in this session. They just removed a major obstacle. When they do that, what do the lumberjacks usually do when they go into the forest and they spend a lot of time and a lot of energy clearing the forest? Eventually, that path that they made into the forest, they will retrace back through that path and go back to their base, where they will refuel, eat lunch, do what they need to do, and then when they head back into the forest, that movement into the forest through the area that they already cleared is easy breezy, because they don't have to cut any trees down, they don't have to clear any bush. They're just walking through that cleared path, and they can get to their where they left off very quickly. So that is what I'm seeing with oil right now. So that retracement can continue. And if that does continue and oil gets weaker, this Canadian dollar can get weaker as well. All right. So let me do something here. We have this here, and let me sync to all charts. I want it to be represented on the 4-hour chart. There we go. And we got that one as well, and we'll represent it on the 4-hour chart. Just like that. Now, when I open up the 4-hour chart, I can see exactly where that area is, okay? And it's right here. I think that is the next target that price is going to be heading towards. That is the next logical target, okay? So this is the only obstacle that is keeping price, that's right here, from going up here. Once the obstacle gets taken out, price is clear to head all the way up there to that area of supply. And I think it's highly probable that this happens. If I had to give it a percentage, I would say between 75 and 80% chance that move takes place. Okay? So that's just one potential trading idea that could be taken. I think that is one of the higher odds from what I'm seeing, because like I said, it's going against what we're seeing with the dollar. Again, the dollar has contacted some supply, and it is shifting momentum to the downside, but in comparison to the USCAD, it's holding quite well. It's not strong. Okay, it's not very strong. USCAD, Canadian dollar getting very weak because of oil. So that's the higher odds. Okay, when we look at the markets, we have to look at what's in play and what is the most probable scenario. What is the most probable move that is about to take place based on what we know to be true about what we're looking at in the markets. Okay, so this one can hold quite well at this supply while the CAD rallies up. This can hold here while the US CAD continues its move up. That could definitely happen. All right, where this comes up to here and the US CAD just holds that area of supply, that can definitely happen. Okay, but again, wait for that obstacle to get taken out first. All right, so that's what we're seeing with the dollar and the US CAD. And let's take a look at the Aussie really quickly, see what's taking place with that one. What do we see here? So the Aussie did something really important too, which I mentioned in the report, and it opens up the floodgates for a move lower in price. So if that were to happen, with the gold, let's take a quick look at gold again. We are seeing a potential setup here for price to go much lower over the long term. Okay, multiple weeks, multiple months. Okay, long and very long term, there's potential for this to drop. Okay, short term, no, move up, but over the very long term, I'd say a drop. And we're seeing the same situation taking place here on the Aussie chart. Same situation where the banks have made some moves and they are clearly bearish moves. Now on the 4-hour chart, sure, momentum is shifting to the upside, not a big deal. On the daily chart, we have a trend to the downside here. Okay, so that is very bearish. So let's use the color coding system just to give you an idea of what we're seeing here. So the monthly chart is bearish. Why? Because we have supply in play. It is in a range, but we have supply in play in a range. That's bearish. Okay? Now, in terms of what has happened recently on the weekly chart, there are signs that more bearishness is to be expected. Okay? In time. We look at the daily chart, and it is bearish. It's downtrending, and we have nothing to stop price from moving lower. 4-hour chart is neutral. So look at that, and what does it tell you? It tells you this chart is more bearish than it is neutral, okay, or bullish. So that lends well to weakness in the Aussie moving forward. Okay, that's what I see. And so that also supports what could potentially be coming down with gold. But gold, it could take some time before it does that, just like it could take some time here. Just because the daily chart is bearish doesn't mean it can't go up. You have to understand that. It can go up, because if you look at price and where it's at right now, okay, yeah, it's bearish. Okay, look at the trend line. Here's the trend line. Here's the beginning of the trend line. Here's the second contact of the trend line. And look how far away we are from that trend line. Those traders who trade mean reversion, they understand the concept of when price moves far away from the mean, it tends to retrace back to it. And so we're at that stage right now. Have we contacted demand down here? No, we haven't. Okay? So it could move lower to contact demand, or it could just move higher from where we are right now. So that's something that you got to be aware of. Just because a chart is bearish, it doesn't mean it's going to move down, especially when price has already made the move, okay? Made the bearish move. It's already made the bearish move. It can either continue or move higher, like I said. Okay, so you have to be aware of that. So there's a good possibility that we see a rally up here over the short and midterm. Very possible. So just be aware of that. Okay, any questions, comments? We're in it half an hour. Let me see. USDCAD supply reached. Yeah. So let me see. Francesco, just confirm me I have the zone correct. Yeah, you have the zone correct. That's correct. Yeah, in case you guys haven't seen, I did create a Telegram channel. So you guys can get the link on our page, on our Twitter. But I'll post it in here in case you guys haven't seen it yet. Let me see. Check to see if that works, that link. Let me see if it works. I just copied it off of Twitter. Get up to see. But yeah, there's been a lot of people have asked about a Telegram channel. They want a Telegram channel where they can just join the channel, and any updates that I have, I post them in there. So updates regarding, yeah, it looks like it's working. Yeah, it looks like, well, supply and demand. I'm not too sure. Anyways, you can go on Telegram, or you can go on my Twitter page, and in the bio there's the link to join. And if you go into Twitter and you just type in supply, demand, Forex trading, you will find it there as well. Okay. And plus, if you're part of the newsletter, you would have gotten the newsletter this morning. I sent it out as well. Okay. So let's see. You want to take a look at the euro? Okay, we'll take a look at the euro and then we'll wrap things up. Okay. So join the Telegram page. I'll be putting updates for posts in the school forum, the live analysis videos that we do, our sessions in the morning. I'll be posting links on there as well. So it'll be a good way for you to get updates on content that we are posting. Okay. All right. So here's euro. And what do we see with euro? It's a similar situation to the dollar, obviously. Price came and it just missed this area of demand, but on the US dollar chart, it did contact. So then we saw a slight reaction to the upside, and now price is just dwindling back down. So I was pointing out that we had a potential short-term long trade here based off of the 15-minute chart, which worked out nicely. There was a zone right here, right there. I said as long as this zone holds, we should expect move to the upside, which we got. It wasn't all the way, there was potential for it to go even higher. I was thinking at least up to about this, up to about this area here, potentially even higher, but now it's reversing back down. So what do we got going on now? What is happening on this chart? Well, from what I'm seeing, we have just price retracing back downwards, but demand is still in play. Okay, but remember the Aussie. Okay, remember what we're seeing with the Aussie, that there could be a bigger retracement, and if that does play out, USCAD is set to go up. The Aussie is set to go down. So how much is this going to play a role in how the other markets will respond? That is the big question for this week. That's what I'm going to be watching for, because if the Aussie drops significantly, then the expectation would be, the logical expectation is that we could see this area get taken out on the weekly chart and then price head even lower. That is the expectation. But if I see that the Aussie comes in and they start shorting it hard and it starts dropping hard, then I'm going to be looking to see if this holds. If this does hold this area, because this is a massive area of demand, so it could hold. If this area holds while that retracement takes place on the Aussie, then when the Aussie contacts demand, this thing will fly to the upside. Okay? So that is definitely what I'm going to be watching for. All right, ladies and gents, does that make sense? I hope that makes sense. Okay? So that's about it. That's it for this session. We pointed out some potential trading opportunities there. I think those are the highest probability, and everything else is just a waiting game to see if things are going to set up. But I'm really excited about what I'm seeing with oil. Okay, very excited with what I'm seeing about oil, because I